Pakistani government has started a so-called cashless economy initiative. In 2025, it has suddenly become one of country's top priorities. High-level committees, fast-track digitization, public statements from Prime Minister, all are pointing to a single direction. Pakistan wants to leave cash behind. Are we really ready for this transition? Or is the country trying to jump two steps ahead without building foundation? A successful enactment, of course, would have great benefits. It would create a Pakistan where payments move instantly, businesses operate with clean digital trails, and the government actually knows the exact size of economy. Today, we are going to explore what is happening behind the scenes. Because whether we like it or not, a cashless Pakistan will change how the citizens live, how they work, and how our economy grows. Let us start by understanding why this push is happening now. A few months ago, the Prime Minister chaired a national meeting that didn't get the attention that it deserved. The government announced three special committees: one for digital payments, one for financial inclusion, and one for accelerating the move away from cash. This wasn't just another bureaucratic grouping. The message was clear. Pakistan now sees digital payments as a necessity, not a luxury. Why is that? It's because Pakistan's economy has a massive problem. We are simply unable to track most of it. The informal economy is so large that even the economists can't agree on its true size. Some estimates have claimed that nearly one-third of all economic activity never enters the formal system. That means no taxes, no records, and no visibility. A cash-heavy economy makes this almost impossible to fix. But the government has second motivations as well. And it is not something that gets stated openly. Pakistan needs more taxation without overtaxing the same salaried people over and over again. A cashless economy might not completely eliminate tax evasion, but it will surely make it harder. It will bring more people into the system. It will increase documentation, and in a financially struggling country, even a few percentage points of digitization can matter. So, there is fiscal pressure, there is political pressure, and there is global pressure. The world is moving forward, and Pakistan doesn't want to be left behind once more. But before looking to the future, let us understand where we stand today. Pakistan is not a country where people use mobile wallets casually or tap their cards without thinking. Cash is deeply embedded in daily life, not just by habit but by necessity. According to recent data, Pakistan has about 7 lakh active digital-enabled merchants. On the surface, this sounds great, but the government's intended target is 20 lakh, which means we are only one-third of the way there. Most small shops, the ones that make up the heart of our economy, still prefer cash. Many of them don't even trust banks. Some don't want to create any digital trade at all. And quite a few simply don't understand how the digital system works. And then there is the question of digital success. Pakistan does have around 5.5 crore broadband users, but their distribution is highly uneven. Urban Pakistanis have rapidly embraced smartphones, but rural regions are a different story. Digital penetration is improving over time, but it is nowhere close to what is needed. Digital literacy is another obstacle as well. Access to internet doesn't automatically mean that people can navigate mobile apps, QR codes, or RAAST-based systems. And finally, there is the biggest challenge of them all: trust. Trust in financial institutions, trust in banking system, trust in digital platforms. If you ask an ordinary Pakistani why they prefer cash, they won't say, "I love currency notes." They will ask in return, "What if the app stops working? What if I can't withdraw my money? What if there is a fraud? What if I get overcharged?" These fears might sound simple, but they are 100% real. Trust is something that takes years to build, and in Pakistan, the institutions don't have a great track record of earning it. So, what is the state planning about all of this? This push seems to have three main pillars. Number one is RAAST and instant payments. RAAST is Pakistan's fast payment system. It ensures instant financial transactions at minimal cost. The government wants it to become the backbone of the entire digital economy, from paying bills to buying groceries. Second is the use of QR-based payments for everyday transactions. The goal is to make QR codes as common as handwritten receipts. Utility companies, small retailers, government departments, all are being nudged to adopt digital payment options. Third is increasing the number of digital merchants dramatically. The target is to take the current 7 lakh merchants and raise it to around 20 lakh. This is not just a technical challenge. It involves training, device adoption, trust building, and incentives. The ambition is significantly large, but the ambition alone will not be enough. The real question is Pakistan capable of executing all of this? Let us imagine the result. If Pakistan manages to pull off this objective successfully, what would change then? And how would things look like? First, payments would become faster, easier, and cheaper. People would waste less time. Retailers will get paid instantly, and businesses will operate smoothly. Second, the informal economy will begin to shrink. It won't happen overnight, but gradually, as digital payments become the default, undocumented cash transactions will become harder to sustain. Third, startups and fintech will get a massive boost. The digital economy opens the door to new business models: subscription services, online retailers, microloans, BNPL products, AI-driven financial services, and many more things. Fourth, the government revenue will increase significantly. It won't happen through new taxes, but through proper documentation. Fifth, the financial inclusion will grow, especially for women and people in remote areas. All of these are real, measurable benefits. Other countries like India and Kenya have already shown how transformative digital payments can be. But that is only one side of the story. We must understand that a cashless economy is not something you can impose by policy statements alone. It requires three things: strong infrastructure, widespread adoption, and long-term consistency. Pakistan sadly struggles with all three of them. If we look at infrastructure, here is the reality. First, there is the issue of connectivity gaps. Even today, entire districts face unreliable internet. Digital systems fail when electricity goes out, which sadly happens often enough. If people can't trust that a digital payment will work, they won't adopt it. Then there is the issue of banking penetration. A huge portion of Pakistan's adult population does not have a bank account. Mobile wallets help, but the ecosystem is too small. And then there is the issue of digital literacy. Many people do have smartphones, but they don't know how to use their advanced features. For example, a shopkeeper may use WhatsApp on daily basis, but still not understand how to scan a QR code. There is also the issue of resistance from informal businesses. This is the biggest silent barrier. If your business relies on staying undocumented, going digital is a huge risk and not a benefit at all. There is also the issue of cybersecurity and fear of fraud. Our people worry about scams, and those fears are often justified. This is not empty paranoia. Plenty of bad actors are found all over Pakistan. We also have to deal with cultural habits. It's simple. Cash is tangible. Cash feels safe. These habits are not going to disappear overnight. The government wants rapid change, but the ground reality is slower, more complex, and deeply rooted. So, is Pakistan ready? The honest answer is partially. Pakistan has some ingredients for a cashless economy. RAAST, mobile banking, growing digital population, government finally pushing in the right direction. But readiness is not a binary. It is not a yes or no. It is a spectrum. Pakistan is ready enough to begin the transaction, but it is not ready to complete it quickly. This journey will likely take many years, not mere months. The biggest work will not be technical. It will be social, educational, and cultural. The government can announce targets all it wants. Banks can build dozens of apps. Fintech can keep innovating. But adoption, that has to come from people. One shopkeeper, one household, one merchant at a time. What needs to happen next is this. For Pakistan to actually reach a meaningful level of cashless adoption, a few things must change. Digital payments have to become more reliable than cash. Incentives have to be created for both consumers and merchants. Education and training programs have to reach remote and rural areas. Banks must simplify account openings. Government must digitize more of its payments. And cybersecurity must become a national priority. If these things do happen, Pakistan won't just be catching up this time. It could leap forward. The population is young, connected, and eager for convenience. So to conclude, is Pakistan ready for cashless economy? Well, not fully and not yet. But the direction is correct and momentum is in place. The next few years will determine whether Pakistan turns this into a real transformation or whether it becomes another ambitious plan that fades into background. Either way, the cashless movement will likely affect all of us, from big cities to small towns, from tech professionals to day-wage laborers. The question is not whether Pakistan should go cashless. Of course it should. The question is, how quickly can we build the trust, infrastructure, and culture needed to make it happen? And that more than any committee or announcement, will decide the future. If you like deep dives into the tech sector of Pakistan, you may want to check out one of our previous videos. If you appreciate this kind of content, then consider liking, subscribing, and sharing the video.